Good morning, it's Monday, it's a brand new week. I'm still FX Plu, and this is CurrencyTransfer.com's Market Brief. The headlines are that the UK has substantial objections to the current Brussels offer. Sterling has retraced all the MPC related gains, and the Eurozone data may well provide fresh impetus to the single currency. So as a brief synopsis of last week for sterling, it was very choppy and largely pretty disappointing. Cable kicked things off at the beginning of the week close to 141 and tested lows close to 138.50 both on Wednesday and Thursday. You'll remember that rates really drove up again after the MPC meeting on Thursday, touching highs of 140.50, but that phoenix had its wings clipped and returned to the embers of the flames from where it came in reaction to the US stock market. The Dow Jones suffered its second 1,000-point plus drop of the week, so the volatility really remains in the equity markets. By Friday, though, for sterling, the rate hike talks have been pushed firmly to the background and Brexit came back to the forefront. UK Chief Negotiator Michel Barnier gave Brexit a real reality check. Without detailing the terms of the offer, he's warned that the UK has got substantial objections to the current terms on the table, and he also suggested that the transitionary period was by no means a given. Look, while Brexit is likely to remain the main cause for sterling movement this week, we also have economic data due. It'll provide a bit of a reality check and move things away from the MPC and politicians perhaps jawboning the currency higher. The inflation data due tomorrow should show that inflation has dropped as a result of the stronger pound and in reaction to November's rate hike. And indeed, a reading coming in with forecast of about 2.9% may well dampen enthusiasm for a rate hike in May. On Friday, we've got retail sales data coming out, and if consumer spending has driven through supporting the forecast, it could give sterling a little lift before the weekend. But either way, further volatility is expected this week, both on the data front from domestically in the UK and also in reaction to the equity markets. In the Eurozone, we've got growth and inflation data both for Germany and the Eurozone as a whole. Looking at the charts, there seems to be good support at 122 for euro dollar, and currently it's trying to rally back towards 122.80. We'll put the exact rates in the comments below. Down under, just worth a mention, my mother's currently on a plane down to better climates right now, so hello mum. On Friday, the RBA released its quarterly statement on monetary policy. It was a 68-page document, and the summary effectively suggests that there's very little change from November's point of view. So in my mind, that 68 good pages wasted. But hey, if there's anything important to come, we'll be the first to let you know. Any questions? Pop them in the comments below and we'll do our best to respond. Otherwise, I'll see you tomorrow.